Today, I wanted to break down how you've been lied to about people always saying that trend is king and you should always follow trend and never go against the trend. And while that is true, I found that I don't know in my smart money concept career and supply and demand career, like just understanding trading, like I don't know, in my journey, I always found that yeah, I followed that, and then as I got better, I realized you didn't actually need to follow that. Because what you'll find is this, and I'll explain to you, and I'm going to show you on this pair in a second. But basically, what you got to understand is, if you want to follow a trend, right, and you want to understand different trends, right, and this is how trend goes, right. You're looking for higher high, higher low, higher high, higher low, higher high, higher low, higher high, right. And you're looking, okay, cool. I want to enter here. I want to enter here. I want to enter here. Maybe there's like a, demand zone somewhere in here, and then there's like a demand zone in here, and then there's like some demand zone in here, right? And you're like, cool, I want to enter on this. But what happens if price doesn't come to this demand zone and it just rips without you? Like, what if it does this? Or what if it does this? Right? What are you going to do then? And that's one of the things I found is that, like, why can't you trade this down to here and then this and then this and then this down to here and then this? Why can't you trade all of it? Why didn't you just trade one side? And simultaneously, let's pretend that this blue line is the daily or the 4 hour, right? And then let's make this purple. What if this is the 1 hour? Right? So we're going higher high, higher low, higher high, higher low, lower low, lower high, lower low, lower high, lower low, and then we'll just stop here for now. So why, when price does this, right? When you see price come up, right? We get a, let's do it from here. Actually, it's the easiest. So once price has a break of structure, what is the expectation? The expectation is that trend's going to continue, right? Okay, but before, like, price does not just move like this, right? What you have to look for is that, okay, price is typically going to have a pullback. When is a pullback likely to happen? After we break the high. So once we have a break of structure, you can expect at some point we're going to have a pullback. Where we're going to have a pullback to, well, again, this is where premium and discount comes into, and I talked about this in the last video. But basically, if you were to buy something, you want to buy something in in discount pricing below 50%, and if you want to sell something, you want to sell it in premium above 50%. It's just common. Like, if you were to look at a chart anywhere in the chart, you want to buy low and sell high relative. That's a way of looking at that. So typically, you'll see buys typically happen around in these areas. So if you understand that, once price has a break, right, what do you look for? Well, you drop to a lower time frame and you see this, right? You see lower low, lower high. So why can you not enter on a demand zone or a supply zone here, play that down to here, and then play the buys up to here, and then play the sells and the buys? And again, understanding that this is the 1 hour. So what about on the 15-minute? You might see this, right? Why can you not play the 15-minute lower low, lower high, lower low, lower high, lower low, lower high, and then it's going to go bullish, bearish, bullish, bearish? Why can you not take these buys to here, sells to here, buys to here, sells to here, and then take the big buy? And that was one of the biggest things I learned on my journey, is like, oh my gosh, it was like eye-opening for me. I was like, holy shit, like, I didn't even realize, like, oh yeah, I don't need to just wait around forever. Like, I can just play the understanding that if price is going to go, it's not just going to go in a straight line. So that's what I want to share today, and what might help you immensely. So what you'll see is that there's this unmitigated demand zone, right? Every supply and demand zone needs to be mitigated. It's either going to be run through or mitigated, but at some point it needs to be mitigated. It can't just, because these are unfilled orders that are sitting here. And so if you understand that, once we have this 4 hour break of structure right here, you know that price is going to eventually have a pullback. Where are the likely areas for a pullback? You know that there's something in here, right? Because this is a sell to buy. And you know there's something in here because this is a sell to buy. So you know, okay, cool. Where am I likely to get a pullback is these areas. Cool. So what can I do? Am I going to wait until price goes bullish on the 4 hour? Well, no, because this is your range. So you play bullishness until you get into discount, or in this scenario, it'd be premium. So let me flip it. So you would play buys up until you get into premium pricing where you see these 4 hour zones that I have drawn out, right? And then you know that. So what if you drop to a 15 minute and you're like, okay, cool, let me wait till the price goes bullish. Well, this is not a true high, but it is a high on like a 5 minute. So once you see that, you can look for bullish order flow, right? So you see bullish order flow, higher high, higher low, higher high, higher low. So why could you not buy in here? Higher high, higher low, buy in here, higher high, higher low, buy somewhere in here, and just play it up until these areas. And that's the key, is once you realize that, you don't have to just wait around forever. Yes, you're going counter trend, but you're pro trend on the lower time frames, playing the pullback. And so what you can do is look on, like, say, the 5 minute. How is this not a nice trade, right? Bullish, aggressive price action, slow move back to the downside, and then boom. And again, look at this, right? The market is fractal, right? So you have, this is a break of structure. So you could technically, once you see this bearishness confirmed, you could look for sells down into this area and then look for buys. And this is like a 1 minute chart. You could look at it, or this is a 5 minute chart, but that's like a 1 minute trade. You could take a 1 minute sell down into these areas on the second chart or the 1 minute. You know, you might be able to get 12 pips. So that could be like a 1 to 5 if you have a 2 pip stop. And then once price gets in here, you look for an entry and boom, it shoots to the upside. And then again, where's price? Boom, you look for a buy here. Wicks in, maybe you enter somewhere in here, and then you get like a, you know, a 1 to 15. And that's the key thing, is you have to realize, like, your trades are not going to go as far because you're trading lower time frame order flow. And at some point, as we just said earlier, right, if the 5 minute is bullish like this, on the 15 minute, it might look like this. And so eventually you're going to get a pullback into a demand zone before you go higher, which would then cause a break of order flow. So say you took a trade up in here, you might take a loss, but then as price comes down into this, say, 15 minute demand zone, then you look to go higher. So you have to understand that every time frame has its own trend. So when you are going counter trend, yeah, trend is king, but it's all relative on the time frame that you're trading. And that's where it becomes really important, is you have to realize that you don't have to just wait around forever for a trade. You know, you can play pullbacks, and that's where it really comes in, and you really feel free after that, because you can kind of just trade everything, right? For example, this, we had this 4 hour break of structure to the upside. Where are you expecting a pullback? Again, unmitigated demand zone, or supply zone, sorry. So you're expecting a pullback at least down into like here, or sorry, at least 50%, but likely down into here. Obviously price broke that, but when you're looking in here, you could look for sells. So let's just go to that area and break it down. Now this is during Asia, so there's not like a lot of setups that I'd be looking at. But if you look at the 5 minute, you know, you might be able to find something. Yeah, so you see on the 5 minute, we have this bullishness, and then we have the bearish price action. Price comes up, mitigates this, boom, mitigates the very edge of the wick. Then we have a move to the downside. Again, I'm not saying it's clean. That's why I typically like to look at a 15 minute break of structure before I look to go short if I'm going counter trend. So you can see there's this 15 minute. So you could look for sells somewhere. Yeah, so there's this supply zone, right? Unmitigated. We'll just use the full zone, right? Unmitigated supply zone. Then you drop into maybe the 1 minute or something for confirmation. And that's where confirmation really comes in, because if you're using structure, you're understanding where price is likely to go, And then you're also pairing that with supply and demand, and then you're using confirmations on the lower time frame that can help you stay out of these really bad trades. And so what you'll see is price has this move in, we kind of take these little tiny equal highs, and then we have a move to the downside. We get a 1 minute momentum shift. Maybe you might have taken this and you take a loss, and then you get what? You get another sweep of liquidity, move to the downside, which causes a break of structure. We only wick it, so therefore it's not as clear. Price then comes up, and then we wick this demand zone, this buy to sell. So you could have taken this as a sell. I personally wouldn't, because it's kind of unclear. But yeah, 2 pip stop, boom. Right, 2 pip stop. We'll just say 2.5. And look at that. Even if you just traded it down, you know, it's 10R right there. And then if you look at following continuations, right, you could trade something in here or in here, right? Playing continuations. Again, I don't like to follow 1 minute order flow. I prefer to follow 5 minute order flow. So I like to wait for a nice pullback into like a 5 minute zone, and then I'll look for sells on the 1 minute. Because then again, because at any point we know that on the 1 minute, this could cause a pullback, which would just be what on the 5 minute be this. So I don't like to trade 1 minute order flow the farther we get away from our supply zone, our higher time frame zone, because I know that that means at any point we're going to see a 5 minute pullback. So we'll put this like in orange or pink. So we know the 5 minute is going to see this. So at some point this is going to fail, and the farther we get away, the more I don't want to trade it. So that's why I like to look at premium and discount. If I'm going to look for a sell, I want it to come into discount, so I know that I have the higher time frame on my side. And I also like to enter trades up here as it's safer. So anyways, hopefully that helps you. This is to help you understand why you can trade pullbacks and why you can, you know, trend is not always king. Like, it's relative, right? Like, trend is king, but it depends on the time frame that you're looking at. You have to understand when you can trade pullbacks, when you can't. And that's why it's really important to have multiple time frames. You know, I use the 4 hour and the daily to understand like higher time frame trend, and I use the 1 hour and 15 minute to understand like mid time frame trend, and I use the 5 minute and the 1 minute to really help me understand lower time frame trend. And when you pair those things together, right, when you pair those things together, you can understand that, okay, price may be bullish on the 4 hour, but it might be bearish on the 15 minute. So it's, oh my gosh, ugly. So it's bearish on the 15 minute, which then means I can then wait till price goes bearish on the 15 minute, wait till it comes into a zone in here. And then once I see a 1 minute change of trend, right? Change of trend, then I can go short. So that's the 1 minute. Well, that was ugly. This is the 1 minute, this is the 15 minute, and this is the 4 hour. And then once we go bullish on the 15 minute and then we come into a zone, I wait for what? I wait for the 1 minute to stop being bearish, or the 5 minute. So this is bearish, but to go bullish on the 15 minute, we have to go bullish on the 1 minute. And that's where I look for buys in here, and then we look to go long. And once you pair those things together, it really helps you understand how the market moves and how to catch these moves and how to not be just continuously caught on the wrong side and being confused. So anyways, hopes that helps. If you have any questions, let me know.